All right, what's going on, guys? Hope everyone's having a great day so far. Let me turn this off because I don't know if you hear me or not. What's going on, guys? I want to start getting a lot more active on YouTube again because I know last time I was posting, I was trying to be some NFT guru or something. Um, but before jumping in, I kind of just want to share a little bit about me and who I am, and basically I want to get back into YouTube so I can start documenting my journey now that I'm coming back into trading. You see, because I was actually introduced to these markets back in 2018 by a friend, and he obviously was trying to recruit me into an MLM. And that's where I was introduced to these markets, probably the same way a lot of you guys were introduced to them as well. Um, I obviously, being a senior, an 18-year-old senior in high school, I was naive. Although I had an engineering job and I was focused on having a career in engineering. um I still was like, sure, let's check it out. One thing led to another, and I took this, pretty serious at the time, but I never really got a chance to master the skill and really perfect the skill because, in my personal opinion, I feel like the company made it a little difficult to be a profitable trader, just because a lot of the events, a lot of the meetings, they were all um, recruiting related. Every time you ask them, hey, but I want to learn how to trade, they would just tell you, well, go learn from the company, right? But when you went to the company's website, it was a little hard to really focus because you had so many different strategies, so many different educators, so many different live sessions happening at different times. And almost it seemed like almost every other month they would come out with a new strategy, and you would have people on your team telling you, hey, I'm making money with these guys. And then you have someone else over here telling you, hey, I'm making money with these guys. And then you have the people on that are the leaders of your team telling you, yo, make sure your team is making money with this strategy. And then everyone telling you what to do, right? And it made it a little difficult when it came to trading. I personally know, within my time, I left that company back in 2021. Um, I definitely, from experience, can say we switched from so many different strategies throughout the years. We were copying and pasting, and then we were using a harmonic pattern strategy, and then we were using Bollinger Bands and RSIs and so many different things. And then smart money came into the picture, and then binary options. And I'm telling you, one thing was, it was kind of like shiny object syndrome. That's what we like to call it. So it made it a little difficult to trade, but what was always there was a recruiting side, and that's what they pushed 24/7. So one thing led to another, and I said, you know what, let's give it a shot. Let's see what this is about. And I started recruiting. So as I started recruiting more, it became a little bit more harder to focus on trading. I'm speaking from experience because I led a team of 200 people at one point, and now I couldn't really just focus and lock in and just focus on these markets. Now I was responsible for 200 people that were looking up to me, that signed up to make money. So I was responsible for, planning events and making sure people were getting to the trips and people were making it to convention and closing and following up and so many different things, that it was a little hard sometimes. It was, pretty decent money, but I just could never master the skill of trading. Although every now and then I was making, maybe I would make like $500, but I never mastered the skill. So once I left that company, I had a bit of an identity crisis because those 3-4 years that I was in the company, that's all I focused on. So I didn't know anything else. I was really so focused in that company that I never even once started my credit. I never even worked on my credit, so um I left that company, and man, I was doing so many different things. I was doing so many different things. I started, as I mentioned earlier, I was trying to become an NFT guru, and then I started a landscaping company, and then I worked for a beer distributor company, and then I did door-to-door sales, and then I became a licensed pest control technician, and I did Uber Eats for a while. It was just so many different things, man. I was hopping from job to job, just trying to make sense of things. And currently, I'm in real estate, and that's really where I knew I wanted to end up, because obviously, real estate is the best investment you can make. It's something that's proven to always grow in value throughout the years. So I'm happy and grateful that I'm here now, but I knew there was always potential in these markets. I just needed to really settle down and kind of understand them. So what I've been doing now for the past couple of weeks, maybe this is maybe like month 2, month 3, that I'm getting back into the markets after a year or so, maybe. I've been really back testing and practicing and stuff like that. Currently I am working with a prop firm, because what had happened, coming back into these markets, I was obviously demoing for a while, just trying to get my feet wet again, and then started getting pretty profitable. So I put $100 into a live account. Obviously, I blew that. My 100 went to 40, and then I put $100 in again. I took that 150 to 500, which is pretty good. So then I put in another 500. So now my account was at 1,000. And then from 1,000, I took that 3,000. And I've never done that before. I mean, I had grown maybe 100 to 1,000 before, but now, with my research and with my maturity, I've understood that uh, you're not really going to become a consistently profitable trader if you're just focused on flipping accounts, because that's not really where the consistency comes into play, right? You want to be consistently profitable. So obviously that $3,000 account I blew, right now I'll show you on what trade I blew that on, but I blew 3K. My account went to like $100, and then I withdrew that amount, and obviously went back to the drawing board. And I had always heard of these prop firms, but I was never a really big believer, or at least I never really did my research on them. So um, I asked a couple people, and I got really good feedback. So I was like, you know what, let's give it a shot. So right now I'm working on a 10K account, 10K challenge, just to give it a shot. I think it's like the beginner account. So I've never dealt with the prop firm before, so I just bought this one just to see what would happen. The rules for this prop firm and this challenge is minimum of 5 days trading, max 30-day periods for each phase. Phase one, you need to make 8% gain. Phase two, 5% gain. And then your max loss in a day is 5%, and then max overall loss is 10%. So as long as you hit those targets and you don't go below that loss, you pass each phase, and then you get funded, right? So this was the end of week 1 for me on the 10K challenge. I'm up about 4%, so halfway there. So hopefully that goes well. But this video, I'll probably make another video, and obviously, as I said, I'll be more consistent on YouTube, explaining like kind of my strategy that I'm developing, that I'm working on right now, and that I'm really trying to perfect. So right now, what I'm really trading is just Nas 100. My trading plan, excuse me, my trading plan, trade Nas 100, only Nas 100 during New York session. And my trading times are between 8 a.m. to 11 a.m. And that's it. I catch it. If I catch a trade, great. If I don't, oh well. Well, there's always another setup out there, right? So, kind of what I've been doing, really trading is, I've made it a lot more simpler now. You'll notice that I don't really have any what do you call them? Any indicators or nothing like that. I mean, I did, as you can see here, I have 3 EMAs, uh, but I don't really use them at all. So now really I've just been using support and resistance, um, price action, and market structure. That's pretty much it. So I'll kind of show you what I'm looking at. Obviously, you'll see it's a mess just because, like I mentioned, I've literally been back testing for maybe a month now, or maybe longer than that, to be honest. But just back testing. But basically, the way I like to set it up, again, I'll probably make another video in depth as far as like what I look for. But what I do is I start off in the daily, find my zones. Same thing, 4 hour, find my zones, 1 hour, my zones, 30, 15, so on and so forth. But on the 5 minute, that's really where um I like to take my trades and I like to enter my trades. Just because Nas 100 is one of those pairs that's very volatile, and it moves like really, really, really good as far as pips. Like for example, right here, or like back here, yeah, like right back here was the start of New York. So literally just within the New York session, we had moved about, I want to say, like, look at that, like 240 pips in just that session, not that day, So 240 pips, or I'm sorry, it's actually about like 2300 pips, so about 2,300 pips. And yeah, it's just wild, Obviously, the most volatile, the Big Daddy, is US 30, but I came back into trading Nas 100. And so that's kind of what I'm comfortable with, and that's what I'm just trying to perfect and use right now. So yeah, so my strategy that I've been working on is focusing on, like I said, market structure, price action, support and resistance. But also, when I talk about price action, I'm really looking for those engulfing candles because I'll usually take a trade after that engulfing candle. So let me kind of show you what I've been looking for. So right here, these were a couple trades that I did take on the 10K account challenge. I entered this one at that entry, but I did close out early just because it didn't follow one of my confirmations. I just entered off of a gut feeling. Basically, we were bullish, did a small pullback on my 5 minute zone, and then we obviously pushed up. Same thing here. We ended up being bullish. We did a little pullback with that red candle. I entered off the red candle and then it flew up. But both of these trades I did not hold just because, again, it didn't follow my trading plan. Obviously, I should have held, but one thing I'm really working on right now is being disciplined. I'm really not focused too much on flipping accounts and turning 100 into 20,000 or whatever, because again, that's not sustainable. That's the word I was trying to find earlier. That's not sustainable, right? At least that's what I've learned. It's dope if you can do that, which is great, but can you consistently do that? And that's very difficult, especially, putting yourself under all that stress. Trading itself is stressful enough, so you don't need to be putting yourself under more stress of trying to flip this account and trying to be all an amazing trader or whatever. The name of the game is make money. That's what we're here for at the end of the day. It doesn't matter if you catch a perfect entry. It doesn't matter if you catch 100 pips, 1,000 pips. None of that matters. Are you actually profitable, and are you actually making money? Right? That was when the switch really flipped for me, because before, believe me, I was focused on sniper entries and 1,000 pips and all this stuff, but really none of that matters, because at the end of the day, I got bills to pay and I'm just trying to make some money. That's it. So let me kind of show you some examples of what I've been looking at. All right. So this is what I mean by engulfing candles. All right. So obviously you'll notice that we were very bullish, right? We were very bullish. We kept going up, but in this area we were consolidating, right? So another part of my trading plan is I don't trade in consolidating markets. So right here, I kind of was just looking at it. I was like, nah, I'm not going to do anything. And again, This was also before my trading window. See, this is also another good thing of setting a time for yourself as far as when you're going to trade, because let me show you right here after this vertical line, like all the candles after this vertical line, um, was my trading window, right? So right here, this vertical line, this was 8 o'clock, right? So everything after 8 o'clock is cool until 11, right? Again, that's just my trading plan. So in here, we were consolidating for a while, and then obviously we broke up. But the bulls weren't being as strong. Price was rejecting up here. Their momentum kind of started to slow down a bit right up here. Momentum started slowing down a little bit. So that kind of gave me one confirmation, like, okay, cool. We're not really gonna push up yet. And then my final confirmation was right here. This engulfing candle right here was what let me know, all right, dope. The bears are in the market. Let's start looking for some sells, right? Mm. If you guys ever feel sick, drink a peppermint tea. I get this when it sprouts. It's a peppermint with mint. It's really good. Anyways, so yeah, my strategy now, what I've really been trying to perfect is looking for these engulfing candles. Because as soon as I get an engulfing candle, I enter. So another key is you got to wait for closure. Closure. You need to wait and see it close, okay? Because easily at like the 3 minute mark, right? This could have easily uh looked engulfing, right? But let's say 4 minutes in, now the candle maybe is like up here and you're looking at like a hammer or a doji or something, you know? And then 5 minutes in, maybe it could freaking be super bullish and just push up, right? So um that's another thing I've been trying to be disciplined on is waiting for the closing of the candle so it can really tell me what it wants to do next, right? So as soon as we close, all right, cool, we get that engulfing candle. There's not that much bullish pressure anymore. Well, let's jump in for some sales. So as soon as it closed, I jumped in and then we let it drop, right? We let it drop easily to this zone because before we've noticed that this is where price couldn't break and it just kept respecting this as a support level. So that was obviously TP1. But one thing that I've been noticing with my strategy is when you trade with the trend, easily you're looking for a 1 to 2 risk to reward ratio. If you're trading against the trend, you're looking for at least a 1 to 1. A lot of the times, 1 to 2s won't hit, but every now and then they might. Okay, so this was one of those occasions where we were very, very bullish, but I was going against the trend. So TP1, our stop loss is right up here above the high of this engulfing candle. So it's a 2022, I'm sorry, 2022, 2020, sorry, 22 pip stop loss. So TP1 is 22 pips. TP2 would have been 44 pips, right? And that TP2 was right here at that zone, right? So easily that hit and we went profit, right? So that was one trade, pretty solid trade. Right here, we have another dope trade. So this is again confluence, right? Confluence coming into the picture. What I mean by that is multiple confirmations hitting at once. So this was another strong trade because we had been on a bull run. I mean, keep in mind this is a 5 minute, right? So we've been pretty bullish for a while, and then all of a sudden at 8 o'clock, we come to my daily zone, right? One thing you'll start noticing if you start setting your zones up from the daily down to the 5 minute, the bigger the time frame, the more respected it is. Now, it's not always going to respect it, but usually you'll see some rejection at those zones. Okay, so here we come to the daily, right? And then again, this could have easily just close above it, and then we could have done a little pullback and just flown up again, right? But what did we do instead? The next candle, this red one right here, this engulfed the previous candle, right? So not only did we engulf, we're also showing rejection at the daily zone. So boom, I was in for a sell right there. Stop loss again at the high, 21 pip stop loss, and we fell all the way to 58 pips, right? 1 to 1 was a 21 pip stop loss. 1 to 2 was like a 42 pip stop loss. Both of those were hit. All right, so that was another trade. Keep in mind, a lot of these trades I did not take. This is just me back testing. Okay, so right here, right? This is what I mean by taking a trade with the trend. The trend is your friend. Remember that. You're going to probably hear it time and time again. So right here, obviously, we can tell we've just been downtrending. Since London, we've just been downtrending, 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 right? So we push down heavy, right? And this is where patience has to come in the picture, because you see, this was this big engulfing candle and this big engulfing candle here as well. Both of these were around 730, 735. I could have looked at this and be like, bro, like it's going to hell. Like this is going down. Like we got to get in now, right? But again, this is where your trading plan has to come into the picture. I would have not taken a trade because number one, I could have taken a trade down here and it could have just shot right back up and I would have lost that trade. So we're waiting for our confirmations. So push down, we broke our 4-hour and our 1-hour zone. Okay. And then what did we do? We came right back up to the 4-hour, 1-hour zone. Okay. This little pullback right here. Not only that, we rejected that 4-hour zone and then we have an engulfing, right? So not only have we been pushing down, but this again tells me, all right, this is about to start pushing down again, right? So confirmation number one, we are trending downward. We're in a downtrend. Confirmation number two, we broke the zone. We're in a pullback. Confirmation number three, we have the engulfing candle. And are we in my time frame that I need to trade? Yes, because right now when this 5-minute candle closed, it was 8:20. So I am good to go on my time. So boom, I would have sold right there. Stop loss at the high. And if you notice, as I won't bore you guys with a bunch of examples, but I'll show you a couple. One thing you'll notice with a lot of these trades is that there's rarely any drawdown. If there's drawdown, I think the most I've seen is maybe like 10, 14 pip drawdown, and then it hits your TPs like automatically. So pretty cool strategy. 20 pips again, 1-to-1 was 20 TP, and then 1-to-2, 40 pip TP, and this went for 60 pips. So keeping those TPs conservative, again, not being greedy. That's the last thing you want to do. You would hit both TPs and you were solid. So that was another great example. Let's see. All right, cool. So right here, again, another pretty solid trade. So we can see that we've been changing direction, right? So obviously this was bullish, right? We were pushing up, but the beginning of London, right? Beginning of London, we broke structure. We pushed it down during London, right? How do we know we broke structure? Because this was the previous higher low, and obviously this bearish run broke that structure. So now we know that, all right, cool, we're going to be trending down. All right, so right here, we noticed that around 7:30, we broke the daily zone. It looked like we're going to keep going up, right? Because excuse me, this candle was so strong to the upside, you're like, oh, this is probably going to keep shooting up. But again, this is why I trade from 8 to 11, because before 8, from what I've noticed, is the market just likes to be kind of on some BS. So I'll wait. So buyers were wrong in this case. We come back down, we close under the daily, we engulf right at 810. As soon as we did that, I would have sold right here because this is letting me know, all right, this is not going to go up. Bears are very strong right now, so let's sell. Stop loss at the high. Stop loss was a 30 pip stop. So again, you're trading with the trend. So TP1 is a 1-to-1, TP2 is a 1-to-2. So TP1 was around right here, 30 pips, boom, smacked, and then TP2 was around like right here, smacked as well, right? Because overall, this went for like 140 pips, right? You could have caught that move for sure, and I'll show you how, but you don't want to be greedy either, right? So that was that trade. And then right here was actually another second entry that you could have taken, right? So right here we come down to my 5-minute zone, right? We can see that it's closing on the 5-minute, and then we see this push up. So this could have psyched some of us out and been like, yo, it's about to turn on us, it's about to go up. But this is where you got to be patient, sit on your hands. The next candle is very, very bullish. It engulfs, right? So right here, again, that could have been another good trade. So let me show you what it would have looked like. You would have put your entry there, stop loss up here, and then ridden it all the way down, right? 1-to-1 would have been like right there, and then 1-to-2 would have been like down here, right? So you see, you're trading with the trend. Both TPs are hit. Although, yes, it is a decent size stop loss, 37 pips. Again, you notice it only went into drawdown for 6 pips, 6 pips. It never went back to entry, and it just dropped to TP 1 and 2. So that was another cool little trade. Let's see if I can show you some other examples. So right here, this, if I were trading a different strategy known as smart money concepts, this right here is accumulation. But now with the style of trading I'm doing now and focused on, this is really just consolidation. So I would have personally stayed away from this. And I just wouldn't have entered anything on here. Although, sure, you could have caught something, but at the end of the day, when you're trading consolidating markets or sideways moving markets, it's really just going to play with your feelings, and you're going to be up in profit for a little bit, and then negative, and then up, and then negative, and it's just not a good mixture. So usually, I like to stay away from markets like this. So let's move on. And one thing as well, guys, I mean, the strategy, from what I've back tested, it has been about 80 to 90% accurate. But it's not always going to be like that, right? I'll show you some examples where I was back testing and I did take an L, so it's not always going to win. You're not always going to win, but as long as your risk management is on point, and you're trading within your confirmations, you'll be fine. So this right here, these were 2 trades. This first one, right? This first one, clearly we were just very, very bullish. Right here, we were pushing up. We broke that daily zone, and then we did a little pullback. We closed right on that daily, and then the next candle that we see is an engulfing candle. So I would have personally entered on that engulfing, stop loss right at the low, and then TP up here, right? So this right here was a 26 pip stop loss. Again, you're trading with the trend, so easily 1-to-2 was hit. 1-to-1 as well, so both TPs were hit here. Okay, so now this next trade, all right, this next trade was actually the trade that blew my account because I was trading on patterns. And a pattern, I have not mentioned anywhere in my trading plan so far through this video that I focus on patterns, because I don't. So again, that was me not being disciplined. But look, this is what I was looking at, right? So I was like, bro, This right here is a bullish flag. It's coming down, and then it's gonna shoot up. So I was literally praying that it was gonna buy, go up, go up, go up, right? But it never did, and that's how I lost $2,900 in one morning. It's all good though. It's just the way I like to look at it is a $2,900 lesson. That's it. It was a lesson that I needed to learn. And the lesson was don't revenge trade and don't overtrade, because I did take a buy. It did hit my stop loss, and I could have easily walked away. I could have walked away with like losing what, maybe 5% of my account, or not even, because I actually had made money that morning. So I don't know, maybe I would have just lost like 1-2% of my profits, not even of my account, of my profits that day. I could have easily walked away and been like, all right, cool market, you win, I'm done. But no, I had to be right, right? And that's the thing. Like we don't predict the markets, we react to the markets, right? So lesson learned, I should not revenge trade, and I will not revenge trade, and I will not overtrade, because like I mentioned, I was already up that morning. I didn't have to take another trade, right? So I should have just walked away. I was up, made my money, good to go, but I didn't. So the sell here, the entry here would have been right here at that engulfing candle. Could have taken a trade right there. It did pull back a good amount on this one. We pulled back like 20 pips, but again, we never hit stop loss. Never hit stop loss. And after that, we just fell for like 250 pips. So, um, yeah. So this was a trade that blew my account. So learn from my mistakes, guys. Don't do what I did. Um, so yeah, that would have been a cool sell that you could have taken all the way down. And in here, there's still like so many other great trades that you could have taken as well. If you kind of just look for those engulfing candles, like look, um, engulfing candle right here, engulfing candle right here, engulfing candle right there, engulfing candle right here. Like you could have taken all those trades and made some money, So opportunities are everywhere, guys, in these markets. So you just gotta be patient and sit on your hands. So this move right here was news. I remember it because I was up watching it. This was FOMC. Obviously, it was a beautiful move. If I would have seen this, and if knowing what I know now about my strategy when it comes to engulfing candles and whatnot, I would have maybe taken this. But this is where your discipline comes in. Look at the bottom. Look at the time. Right down here. Look at the time. The time is what? 12:50. And as I told you guys earlier, I only trade from 8 to 11 a.m. So this was well outside of my trading time. So even if we did have that engulfing and obviously we did fall, I would have not taken this trade. I would have not taken this trade because, again, discipline. Discipline will always win in these charts. So let me show you this trade, though, that you could have taken that morning. Obviously, we had been very bullish, right? We had been very bullish, just going up, right? Push up, small pullback, push up again, right? So you could have taken that buy right here, because we had that engulfing, right? Engulfing, market structure is telling us, we are going up. Bears are slowing down. We have an engulfing. Boom, we enter. Again, you notice zero drawdown, automatically go to our TP, right? So another dope trade right here. So right here, look at this. I was back testing and I did take an L here, right? I did take an L back testing here, and let me show you why I took an L. So we're bullish, right? You can definitely say that we are bullish here, right? So if we keep watching the market, right, what do we notice has just happened? So this was a previous low, higher low, and market just broke that low, meaning we broke structure, right? So in order to secure and really, really be solid about a 1 to 2 risk to reward ratio on a trade, we should be looking for what? We should be looking for sells because, like I mentioned earlier, if you're trading with the trend, a 1 to 2 always hits. So here, um, what I did was, as I was back testing, I was like, oh, look, we have an engulfing. We rejected off the 4 hour. Let's enter a buy, right? And we were good for a little bit, right? Next candle, we shoot up, but then boom, shoot all the way down and we hit stop loss, right? So this was an L again because we weren't paying attention to the market structure. And because I trade on the 5 minute, I really don't look at market structure or price action on the bigger time frames because I'm really just looking for 20 pips minimum, um, 40, 50 pips max, you know? And that's very, very doable on NAS 100 on the 5 minute, right? So bigger time frames, they don't matter when it comes to market structure and price action to me. They don't matter to me, okay? I only look for those things on the 5 minute time frame. Sometimes 15 minute, 3 minute, kind of just depends, but mostly I'll do everything on 5 minute. So that was an L right there, right? Um, but now knowing that we are looking for sells, right? Our next entry would have been right here, right? Because what do we see? We see market has broken structure. We came down, right? And then we have a little pullback. We've just rejected off of our 15-minute zone that we had drawn up earlier. Not only that, we have an engulfing candle, right? And because we already said we're looking for those sells, right? Let's go in and jump in for those sells. So entry, as soon as that candle closes, we're entering stop loss at the high. So it's a 14 pip stop loss. Now we're in for sells. Boom, look at that. A 1-to-1 was like up here, 1-to-2 was down here, right? Boom, you would have made money, right? So again, guys, it's trading can be very, very, very simple. You just have to have discipline. You have to have discipline. You got to be patient and wait because there is always opportunity to make money in these markets. Just got to wait for your trade to align and show you the confirmations that you're looking for when it comes to your trading plan. But guys, thank you for watching this video. Hopefully you gained some value, but I'm gonna start being a lot more active on my YouTube channel because like I said, I want to start documenting my journey when it comes to trading. So hopefully you'll be along the ride. This is the end of week 1 on my 10K challenge. I'll let you guys know how that goes as soon as we pass it and we get a payout. Next step is moving on to the 100K challenge. So and that's very doable because those of you that know when it comes to trading, the same way you make $1 in the market is the same way you make 100. The same way you make 100 is the same way you make 1,000, so on and so forth. So, guys, thank you so much for watching and have a great night. Peace.